Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit and KYC, the company which is coming today. I'm going to give you some hints. Try to guess it and then we will give you the entire company's name. The first one is it operates in the co-working office space industry. Only 3-4 names are there. It'll become easier for you. Stock was recently listed in 2025 in September and from there it's down 24% from its IPO price, and the entire industry seems to have seen a little bit of derating because it's very new, this entire office space industry. Also, another important hint I would like to give you, it's a key beneficiary of GCC, Global Capability Center explosion in India. So do watch out for this theme and this stock. And the company in focus is very interesting. It of course has an indie name to it as well. I'm talking about Indiqube Cube. Though you know the company's name is Indiqube Spaces. That's the name coming in. And interestingly, why are we calling this management? That's also very much important. And of course the Q3 numbers have been very strong. That's one reason. Another important reason is that it's going to be Q4. And the company in focus is Indiqube Spaces, which I'm talking about. We had given you a lot of hints for that. But why are we calling this company? What are the key reasons for it? The first one is, will a strong momentum continue in Q4 going ahead? That's a bigger query to be asked because Q3 numbers has been strong. The second question we'll be asking the management is, what are the benefits of the GCC segment explosion in India? We have been hearing so many news, Hyderabad, Surat, Coimbatore. Where is this action lying? Also, the third question would be, what's the clarity on the accounting adjustment losses? The investor community is still a bit confused when it comes to these accounting adjustments, and because of that, the PAT numbers at times get skewed when you analyze the company. Of course, the margin and the PAT growth guidance is also very much important going ahead. And remember, it's a new business model. Market is taking its time to digest which operational parameters to track and value this sector. Also, important question would be the expansion plans as the tier 2 cities. The story goes ahead. Company, of course, has expanded in Bhubaneswar, Guwahati in Q3 numbers, which we had seen. So these are the key reasons why we are trying to call Indiqube Spaces. And with us would be Rishi Das. He's the co-founder and CEO of the company, and we'll be asking Rishi a lot of questions on the industry and the company as a whole, and also the financial pathway going ahead. So these are the important triggers and the on-the-show guest. But let's talk about the company, what's all about. Remember, this sector is relatively unknown. So it's been 2 to 3 years when most of the peers have been listed. It's a workplace platform company. This can have a different type of clienteles. That's something to watch out for. Also, another important reason is it's present in 17 cities. It's just not a metro story. Almost 9.55 million square feet of area under management is there. Apart from that, looking at the expansion, there's roughly 1.5 million square feet was added in the third quarter, 33,000 seats, and interestingly, even the centers, they have also gone up. Also, apart from this, looking at the overall setup, they have entered 3 new cities as well, and of course, we'll give you more details about how much that square feet area has been added. Also, let's look at the expansion. First one is, of course, Bhubaneswar, 45,000 square feet property coming in. And these are, single large clients across various segments. Another key expansion announcement was there, and that was for a Chennai project, 44,000 square feet as well. In Bengaluru also, important announcements has come in regarding the expansions. Apart from these expansions, Guwahati, that's an interesting city. And the fintech unicorn would be in focus, where they have done a 22,000 square feet design and build project. Design and build project is also pretty much a high margin segment when we judge a company in this space. Occupancies, it was 81% and now it has gone up to 84%. We compare that on a year-on-year basis. So yes, the company is aspiring for that 90% occupancy levels, and these clients also generally have long-term lease agreements because these are grade B important properties. But key metrics are very much important. AUM is your asset under management of the commercial area space, which I talk about. It's under square feet, and that's the 19% growth coming in all the 3 parameters, be it seats as well as centers as well. So there's a decent growth coming in. But how is the client occupancy split looking like? Very much important. If a client is having 0 to 100, it's very less. it's around 11%, and this part is not very sticky, this customer base, but this customer base is very sticky. And look at that amount, 300 plus seats. So that is where the strength comes and the revenue visibility comes when you judge a company in an office space industry. Let's look at the client breakup, how things are panning out, and it's a even Stevens. It looks like MNCs and startups, that's around 60%, a very stable if you talk about MNCs, and 40% is for GCCs. That is even much more stable. This is the segment which we feel like this can go up to 50 or 60% also, the way GCC explosion is happening. But don't worry, the Indian startups are also not behind. So there will always be a push and pull when it comes to the GCCs and MNCs. So this was all about the company, but I would like to talk about the rating parameters where we judge a company in KYC. Numbers are very much important. You have your income statement, balance sheet, cash flow over here, where we focus on the key numbers. Return ratios, what you can expect. Street cred is very much important, but remember, company has a very short history because it was listed itself in 2025 September, but nevertheless, we will judge the company on this parameter. Valuations, we'll compare that with the peers. It's a very handful of the peers, and I'll explain you where is the valuation gap or any mismatch, because the industry still hasn't figured out this entire office space theme. There is a path to profitability, there is an expansion, there is an outlook of the industry. So a lot of moving factors, and it will take some more time or some more months until the market actually figures out what this sector is. Also, let's talk about the first rating parameter, and that's the income statement. Income statement largely has been doing really well. The explosion is coming in revenue, seeing a good growth, and the Q3 numbers also, if I talk about, they have been strong, and the PAT number has increased. The margins have also done well, and the numbers which you see over here, that's the path to profitability, and that has been, you know, kind of FY24 was a watershed year, and that's why you're seeing a higher PAT flow, if you could say a big loss, but then after that the losses are coming down. And the Q3 numbers is something which attracted, and markets actually focus on that. That's the most important thing. Of course, the past is definitely there, but that's largely absorbed into recently there in the IPO, and after that stock has been falling. But let's focus on the present, and that is where the future also comes in. These are the numbers to look at. They look really strong. On that basis, I have given income statement a strong thumbs up. Also, let's talk about balance sheet. Balance sheet is also very much important, but I have made it a bit simpler for you today. I want to give you the best juice material which is there in the balance sheet, and we have converted, or we could have compared this on a year-on-year basis. The net worth has almost tripled. One thing which I like about this, of course, there is some asset-heavy model business to it also. It was 0.8x. The debt equity ratio, now it has come down to 0.15x, and that is something which is very important and very good for the company and very decent for the sector also. Cash also, the balance, that has also gone up. So balance sheet is strong as well. So income statement is good, balance sheet is good, but why is the street not giving that premium valuation? That's important as well, and maybe one of the reasons is the cash flow. The conversion of this cash flow is still not very much into the positive side. It's, you know, still a very, you know, in a range. So there is no clarity on this industry itself. I'm not just talking about the company, talking about the other players also. The cash flows are very erratic, or maybe there is a lumpiness in the business model, and that's why we tend to give a very independent opinion of the industry and this new type of companies, and that is the main mantra for KYC. So looking at this, it creates confusion. So I've given a thumbs down when it comes to the cash flow segment. Also, let's talk about the return ratios, and generally this is a high return ratio business model. And looking at the return ratios, the ROC numbers, they have done really well, and anything above 15%, give or take, is a good sign. 19% here when it comes to ROCE. Let's pull out the ROE numbers to see where's the movement happening. And yes, there's a significant jump happening as well, as and when this business model is stabilizing. Industry experts tell me at least it's a 20% to 25% plus return on ratio business model. It's a very stable business model. There's an annuity income which comes in here, and you see if you are into grade B or grade A products, these earnings which come in, they also come with an escalation clause and good clients. So it's a positive view on the return ratios. There's nothing neutral happening. I've realized that's pretty much interesting. Either it's really good or either there is a big concern. And this is pretty much interesting for an analysis here. But a shareholding pattern is where things might get boring in our analysis because it's just been 2 quarters of data. So let's be fair, there's nothing, any much movement has happened, be it the institutionals or even the promoters. So to be fair, I'll just give a neutral rating and wait it out whether institutional participation goes up or it comes down. The DIs are still supporting this theme, but FIs need to take some time and understand what this business model for the company or the industry is, as we are still learning. It's still an infancy stage. Apart from shareholding pattern, let's look at the street cred. How much returns have come in? History is small. IPO price was 237 rupees per share, but the stock is not trading there. Let's pull up from IPO price, it's down 24%. That is where the concern comes. If you have applied for the IPO, even after that, you have not made money in the stock. Also, from 2025 highs, also the stock is down 14%, and that is where the concern is. You are here in the stock market to earn money also, and if that doesn't come, then the street cred for me would be a strong thumbs down. Also, apart from the street cred, let's look at how the valuation peers actually come across. And the valuation premium, let's just talk about it, how much the movement is happening, and there are a lot of peers to it. Let's talk about them one by one. Of course, you know about SmartWorks, you know about Office Space, and there's another company called EFCI. And see how skewed this overall valuation looks. SmartWorks is at 139 times. A lot of these companies are coming towards the path to profitability. So we do not have a proper valuation setup. Indiqube is also on the higher side, 70 times. Office, 22 times, and EFCI, that's pretty much interesting. That's just 10 times. So where is the valuation comfort? Doesn't look like for Indiqube Space, because we have to compare that in a relative basis. And remember, all of them are on the 12-month forward P basis. So it's a strong thumbs down for valuations right now, and maybe that's why markets are not giving into a strong Q3 earnings also. That means the IPO pricing might have been on the higher side, and that's what the street is saying, that the numbers are talking about it. Apart from the valuations front, let's look at the outlook, and outlook is expected to be really strong because there is a management commentary, continued stability in margins which are coming in, and they expect that for the fourth quarter as well. Also the strong closure they are expecting by the end of FY26 as well. So if we are seeing a strong Q3 performance, Q4 performance also might be strong as well. But will markets give any kind of surprise? That is something to look for. But the biggest thing in India, the biggest trend is the GCC explosion. That's very much important, and 2 expansions already happening in the tier 2 market spaces as well. And the inquiries are also suggesting there might be good up move. So outlook is very strong for the industry. For the company itself, of course, we'll talk about it as and when Rishi comes in and he gives us the views. And also finally, let's give the final rating parameters for the company. Income statement, balance sheet has been really strong. Cash flows still remain a concern, so we need to understand the model. Return ratios also coming in positive, expected to go up that 20% mark, analysts are feeling. But street cred, that's a concern coming in, valuations also, because the market has not priced this sector right, and that's a concern. But the GCC part is something which everybody is looking at. So net, our total rating parameters over here I would like to give is 4.5 out of it. That's relatively on the higher side of the average numbers which we give to the company. But to understand more about this company, we'll have Rishi Das. He'll be joining. He's the co-founder of Indiqube, but he wears a lot of other hats as well. He's the co-founder for CareerNet and consulting as well, and education is also top class from IIT Roorkee. So that'll be pretty much interesting to have a chat with Rishi on this interesting phase. Joining us is Rishi Das. Hello, Rishi. Welcome to NDTV Profit, KYC and Q3 numbers. Let's focus on that. You know, every parameter was really well. What stood out, and Q4, what we can expect, Rishi?
I think Q4 should be almost a repeat of Q3, Sharad. That's how we look at it. And we should be able to do a growth of more than 30%. That's what we are gunning for. And our EBITDA margin, which is around 20-21%, we see we should be able to maintain it with a range. And very similar numbers we expect for PAT also to be there.
Okay. So interestingly, the fourth quarter might be a mirror image of the third quarter. But Rishi, we need to understand this industry, the markets has not actually understood it, and maybe that's why some
Yeah.
underperformance is also coming in. So in a very simple terms, people who are understanding or hearing your company the first time, what are the key levers for your industry right now? And how do you look at these industry numbers? Because it's just not simple PAT numbers. There are other important operational parameters also which one should
Yeah.
judge a company. So just you to give us a simple primer on that so it becomes easier for our audience who are listening to you
Yeah.
first time.
So this is, thank you, Sharad. As you have rightly explained also, I think this is a managed office space industry where we take buildings on long leases. We do the entire fit out, provide a plethora of value-added services, and then we offer it to different clients. And large part of our clients are large size, long stay. Typically, 62% of the clients have taken more than 300 seats, and they have provided us a lock-in commitment of 3 years. So there is a good amount of annuity business, and 40% of our clients are global capability centers, and they constitute about 56% of the revenue. So it's a very sticky long-term kind of a model. At the same time, while we take properties on long leases, our commitments to the landlords are for a period of 3 years. Lock-in commitments are only 3 years. So after 3 years, if we have to leave the property or we want to leave the property, we can leave that. So that way, we have a very healthy asset liability mismatch managed over here very well over there. And if you look at our basically rent to revenue ratio, we have been north of it 2.0%, 2.2 times that has been there. Plus, if you look at occupancy, our steady state center, which are more than 12 months old, we have maintained occupancy of 90% plus. Overall occupancy has been about 85, 86%. So net, it's a very good business. And if I talk about the industry today, if you look at India absorbs about 80 million square feet of space, about 22% of space is being absorbed by the managed space industry. And this industry is growing at a very, very healthy growth rate. So overall, I must say all positives. Of course, the understanding with the street and the retail investors are lesser, purely on account of the accounting standards, because our industry follows Ind AS accounting standard. Whereas if you look at while we have been saying that we have been having losses for last 3 years, we have been paying income tax. My PAT for the quarter ended is 40 crores. So I think the way we are capitalizing the leases, which essentially are basically you can say financial kind of outgoes, all that is basically creating a kind of a confusion, which I'm sure at least a lot of institutional investors have understood. And that is where we saw very massive oversubscription in our IPO. And most of them continue to hold our stock in spite of the price taking a beating. So I think there is a learning curve which our industry is going through. And I'm hoping that by the time all of us are 1 year out into our financial results, I think this should stabilize at a good valuation as well over there.
Exactly, Rishi. That's the entire point of our KYC show, as well as where there is a concern in the industry, or if it's new, then it's our prerogative to get it at NDTV Profit and understand and also give a fair view on that. But this entire clarity on the accounting adjustments, if you could just simplify it more, because everybody is stuck on the usual accounting
Yeah.
theory which you spoke about, but you had given a little bit of hint in our last conversation, but
Yeah.
just to put it in a very simple manner, accounting adjustments, how much it impacts your business, and actually what's the long-term picture?
Yeah. So if you look at the for the 9 month period that just got over, we have accounted for a total interest on lease liabilities and depreciation on the right of use of assets to a tune of 671 crores. Whereas our total outgo towards rent was 462 crores. So meaning by that there is a 209 crores of additional basically expense we have booked typically, and that is where you are seeing the skew. See, one logical question for people to ask is that why is the EBITDA margin so high, and then and by the time you reach the PAT, it turns negative. So the answer lies in that when all our leases, suppose if I have a 20-year lease with the landlord, the entire rental for the 20-year lease is first capitalized. It is not treated as an expense, and that explains why you see an exceptionally high EBITDA margin typically on the Ind AS side. Then what happens? since these have been capitalized, then there is a right of use, a depreciation on those assets, basically, plus the lease liability. These are taken into account, and they tend to be much, much higher. Because, for example, if I am paying today, say, 100 rupees rent for a property, at the end of 18th year, 19th year, my rental might be even 200 rupees. So the entire rental we have first capitalized, and then we are taking depreciation. So basically, that is where the whole challenge is coming. And you talked about the cash flow. Our operating cash flow is 180 crores for H1, typically free cash flow.
Okay, so that moves as well.
Yes.
But the net cash flow is how much for H1 or 9 months?
So totally, if I were to explain it right, I'm not the finance wizard here, but yeah, if I were to say that the OCF was 180 crores for the H1 over there, and our capex was also the tune of about 180 crores during H1. That number we do on a half yearly basis. So that has been the thing. And another fact is, if you look at our CRISIL rating, we are CRISIL A plus rated. Typically, normally you will not see a company who is reporting this kind of losses to be CRISIL A plus rated. So CRISIL has given a very high rating. So I think there is some amount of misunderstanding, which I am sure your show and whatever I have talked little will definitely help clarify.
Exactly, and that's the entire point of it, and that's why we are one of the most loved shows in the KYC segment across the media. But importantly, the GCC explosion we spoke about, it's very much going up. I'll have two questions for you. The GCC segment is 40% right now to revenue. Can it tilt towards the 55-60% mark? And also tier 2 segments, I'm hearing about the Bhubaneswar, the Guwahati expansion, because that's where the growth is coming on the low base. Yeah. So I want in these two important trends to take your views on that.
So for us, the GCC as a percentage of clients are 40%, but they constitute about 56% of our revenue. That is one fact. The other fact I will highlight is that typically India absorbed about 80 million square feet. 50% of that absorption was in South India, predominantly three cities, Chennai, Hyderabad, and Bangalore. And 80% of the total GCC growth happened in South India. So you can imagine, while 50% total absorption is there, but the share of GCC in South India is 80%. So clearly the GCC story is very, very lopsided towards South. And in all humility, I must say that we are the largest operator in South India, typically, and with very, very prominent presence in Bangalore, all of that. So we are very well poised on the GCC story over there. Now, the other point that you talked about, the tier 2. See, what is happening is today jobs are going where people are. Unlike when somebody like me joined the industry, we went where jobs were. Somebody like me came from Lucknow to Bangalore, 2,000 miles for job. But today jobs are going where people are. And that is where you are finding that a lot of growth is happening in tier 2 cities. And we are now in 17 cities. As you mentioned, we added Guwahati and Bhubaneswar recently. So overall, jobs are moving there. But on an aggregate basis, still the tier 2 numbers are not very large. If I were to put a number, about 8% of the total real estate in the country will be in the tier 2 cities. It's still the bulk is tier 1.
Interesting. Yeah. Rishi, but one final question. Your business model is, to be honest, you give working spaces to it, but there are some new areas coming up like fittings and flexi working spaces where your customer can do a lot of interior works as well. And that's what I have picked up talking to your competitors as well. In this high margin segment, what is the outlook?
Again, very, very positive outlook, because out of 80 million, 20 million is being done by our industry. So there is 60 million square feet, which is being the traditional model. Clients are taking up spaces and then they are involving various people to do their design and build. So we have a very strong program called Bespoke. And as part of that, we do a lot of design and build for a lot of clients, where clients have taken the office spaces. So that's a very big industry. That's a more than $1 billion annual industry, and we have good presence in that, and now we are doubling down on that as well. Typically,
right. Yeah. Thanks a lot, Rishi, for that. You cleared a lot of air regarding the company and the industry, as well as the market actually tries to understand the model which you are there and hopefully give you the valuation which you may deserve. Thank you very much, Rishi, for that, and best of luck for the future. Well, that's the management of Indiqube Space, and they have stated definitely that the industry is in a good up move coming in. Let the market take its time to actually decide what can be expected. And overall, the ratings I have given is 4.5 out of 8. The numbers look good, but that profitability, that accounting adjustment, that is something you should be watching out for as well. But industry still hasn't found its multiple, so we'll be focusing on that. So that's all, folks, for today. Keep watching NDTV Profit. We'll be getting you new important companies as well as industries. Stay tuned to NDTV Profit.